But
Good morning, everyone.
good morning.
I, Mrs. Pooja Sodankar, welcome you all for the RUSA sponsored Emporio Summit on the role of AI in the financial sector. Now, let me take the privilege to introduce our college to you. Shikshak Samuha's Patkar-Varde College was established in the year 1964. The college has various aided and self-financed courses at the undergraduate and the postgraduate levels, along with diploma and certification courses. It is an autonomous college affiliated to University of Mumbai. We are proud to mention that our college has received several awards. Our college was re-accredited by NAC as an A plus grade with a score of 3.53 in the year 2019. Achieved Best College Award from the University of Mumbai in the year 2016-17. Our college is also ISO 9001-2015 certified and DBT Star Scheme awardee. We also have got India's Education Excellence Award 2018 from Berkshire Media, USA. In April 2020, as per Education World India College Ranking for 2020-21, our college was ranked 45th in all India and 10th in Maharashtra. Also, our college is RUSA 2.0 awardee. Now, I would like to introduce to one special person, but let me just tell you, the impulse factor behind our every single task is a strong woman, a woman of substance, Dr. Mala Kharkar. Ma'am has rich qualification in her field and was awarded as Best Teacher. She was also awarded as Best Educationist by Global Society for Health and Educational Growth, New Delhi. Ma'am has always been an inspiration to all of us. She is a strong source of motivation for all the endeavors that we undertake. Thank you, ma'am, for being our inspiration supporter. Now, I would also like to introduce our respected principal, Dr. Pratibha Gaikwad. Principal Ma'am Dr. Gaikwad, an academic and administrative leader, author, resource person, has obtained her MA Economics from Wadia College, Pune, and PhD from Pune University. She has 27 years of teaching experience. As a PhD research guide, she has 12 students have obtained PhD under her guidance and 4 students are pursuing PhD. She has been conferred on 2 design patents by the Government of India. In capacity of NAC peer team member, she has assessed 40 plus colleges throughout India. Ma'am, we are grateful to have you today with us. Ma'am, now I would like you to have some few words and enlighten us. Over to you, ma'am.
Thank you. On behalf of Chikitsak Samuha's Patkar-Varde College, I highly appreciate and welcome one and all for this Emporia Summit, which is RUSA sponsored national webinar on the role of artificial intelligence in Indian financial sector. The Department of Commerce and Management in specific and the whole college in general is led by our eminent leader, Honorable Dr. Mala Kharkar Madam and all the management committee members. As rightly stated right now by my dear colleague, this college has the privilege of having various statuses and awards for its quality imparting its quality enhancement drives and the quality which is imparted through various courses and programs. The title of the seminar, The Role of Artificial Intelligence in Indian Financial Sector, has a great meaning and importance in this 21st century. So far, the world has gone through several ages: the Stone Age, the Iron Age, the Plastic Age, number of ages we can state. And this is the age which is broadly termed as computer age. And in this computer age, digital technology is running a marathon race, and AI seems to be a buzzword these days. Financial services industry has entered AI phase of the digital marathon, as rightly stated, a journey that started with the advent of internet and has taken several organizations through several stages of digitalization. The emergence of AI is disrupting the physics of the industry, weakening the bonds that have held together the components of the traditional financial institutions, and it is opening new and very much needed doors to more innovation and new operating models. As we all know, AI will be taking place of all the monotonous work, whereas creativity and imagination is left to mankind. And that is why units, topics like artificial intelligence should be imparted to commerce students, commerce and management students to be more specific. AI is transforming the job market rapidly by automating tasks previously performed by humans. Monotonous tasks will be now given to the AI. According to the report given by McKinsey, as much as 14% of the global workforce might need to change the occupation by 2030. 2030 is not far away, it is very, very close now. That is due to automation. This trend poses a significant challenge for educators specifically, as they must prepare students for jobs that still need to be created. In this context, it is imperative to prepare students for the jobs of tomorrow, which will require them to possess a set of skills that complement the role of AI in the workforce. And now, with the advent of NEP 2020, making the students employable, vocational, skill oriented courses are supposed to be imparted to the students, especially the outgoing students, which will form the workforce of 21st century, not only at the local level but also at the national level. So with these few words about the importance of AI, I take the privilege of welcoming Miss Poddar madam, who has been very kind enough to accept our invitation, spare her valuable time, and enlighten us on her scholarly views on AI in the financial sector. Because, as we all know, financial sectors, institution, banking sector, banking services are the bloodstream of any economy. So it occupies a large importance. So I congratulate my Department of Commerce and Management specifically for organizing this wonderful activity under the leadership of our Honorable Dr. CEO Madam Malakar and Thakkar Madam and her whole team. And I once again place on record my high level of appreciation towards Honorable Poddar Madam for accepting our invitation and willingly participating in this webinar. With these few words, I express my appreciation and I wish you all the best throughout the seminar. Thank you. Jai Hind, Jai Maharashtra.
Thank you, ma'am. Thank you very much. Now, let me now take the privilege to introduce our resource person, Miss Kamalika Poddar. Miss Poddar has pursued her B.Tech and later her MBA from SSN College of Engineering, Anna University with 7.4 CGPA. Her rich work experience in the industry starts with being a product analyst at Temenos, where she helped design training and certification modules and was awarded gold level. Then she worked as cards and payments analytics manager Axis Bank. Later, she changed it to strategy analytics lead for new businesses PayU. Currently, Ms. Poddar is working as a senior product manager, account aggregator, CAMS FinServe. Ms. Poddar's recognition include as two times LinkedIn in top voice in the year 2020 and 2022, LinkedIn creator and accelerator, with 35,000 plus newsletter subscribers. She is a recognized fintech speaker. Ma'am, I seriously feel that The more I want to say, the less I have words to introduce you. Thank you for being here, and over to you, ma'am.
Thank you so much for the kind welcome, Patkar College. It's really it's a privilege to be here, and kudos to the entire team here. I think this is the first time that I'm in a panel where I'm surrounded by women who are all enthusiastic about the field of finance. That's a first for me. So thank you so much, Patkar College. This is indeed a really great welcome change for me. So a little, I just before we get started, I did have a presentation that I wanted to, kind of take you all through. Where it's very basic. Is it visible on the screen? Oh, awesome. There it is. All right. So it's a very short sort of a presentation, and the way that I have kind of structured it is that I will take you guys through a brief introduction. I know that ma'am has done a very great job of introducing me and really humbled for that. But yes, just a little bit about my background. And then we'll deep dive into the different kinds because financial services is like a labyrinth over there. So there are so many different kinds of products that are there, so many different kinds of financial institutions that are out there. So we'll kind of dive into each of them and figure out how they work, so that when we get to the later half of the part where we're talking about AI and the technologies that are there in it, it will all kind of make sense for us. We'll also touch upon some of the other happening things, like what's happening on the fintech space, what's happening with blockchain, and all of that as well. And as always, because this session is for all of you guys, at any point that you feel that you have any doubts or questions, do feel free to drop it in. Do feel free to put it up in the comment box out there, and I would love to take your questions over there. So, with that, yes, a little bit about myself. I've been in the fintech space for it's going to be 10 years. It's almost going to be 10 years now. I started out on the core banking side. This was back in 2012, where core banking platforms were still very new in India. And then I moved on. I did my MBA from MDI Gurgaon, then moved on to handling the payment side of things, where I was handling the credit card and the loyalty program over there. Was in the payment space for almost about 5.5 years, and now I've moved on to another very exciting and upcoming space, which is open finance, or what we call in India as account aggregators. So that's my professional background. I've also worked on very interesting products. Like back in 2016, I was working on UPI, and look where it is now today. And in 2022, I started working on account aggregators, and I'm just hoping that, in another 5 years, I can say the same for account aggregator in India as well. My hobbies include I love to read, I generally de-stress by singing. uh, and I do hope to run a marathon by the end of the year, so trying to get fit. I run a weekly newsletter also, and that's probably what got me recognized as a LinkedIn top voice, because it's on LinkedIn. My newsletter is on LinkedIn, and the newsletter also helped me get recognized as one of the top 12 global AI and finance influencers by Data Rails as well. That's enough about me. Let's move on to what really is happening in the financial services industry. But before we get to that, it's kind of important that we understand what really is financial services. What do we mean by financial services? So, a very broad way of looking at it is, how is it that consumers or businesses are acquiring and using financial goods and services? Now, financial goods and services can be across a plethora of different kinds of uh, financial services that we have out there. I'm sorry that the alignment is a little out of whack over here. It's a problem with PPT. When I translated it into PDF, it kind of all went out over them. Sorry about that. But yes, if I had to think of financial services, it's basically a fundamental way of managing money. And that money can be for us and consumers, or it could also be for businesses. So broadly, three things, if I had to say, that's what the financial services industry does. The first one is to figure out how consumers and businesses use and store money. The next one is to provide a way to kind of uh, alleviate the risks that people are taking. And then the last one is providing advisory services that can help you to grow your money. You just don't want to store it, right? We're all students of finance here, so we know that we want to beat inflation and have like a good corpus at the end of the day so that we can grow our money. We're better off today than we were yesterday. And so these three broadly, I would classify it into these nine broad categories of financial institutions that are there. But what do they do, right? They deal with money, and money can buy us a lot of things. But even amongst the things that money can or cannot buy, there's a distinction between goods, which is a tangible physical thing that lasts. Whether it lasts long or for a short duration is a different thing, but it lasts, a tangible good that lasts. And the other part that money can buy is services or tasks that others perform for you or on your behalf. And a financial service is not the financial good itself, and by financial good I mean like an interest or a loan or the dividends that you're being given, but it also involves the transaction that occurs in order for you to obtain that financial good. So the financial sector covers different types of transactions. It can be in areas as diverse as, say, real estate, to something as digital as, say, cryptocurrency. They all come under financial transactions. So and really the distinctions within the financial sectors, it's not like you have clear cut boundaries over there. For example, going back to real estate, because that's what I was talking about, you could be someone who is selling real estate, but most of your customers do not have the corpus to just buy a flat upfront or buy a property upfront. So you help them by providing them a home loan with repayment schedules that can match their income levels over there. So that's a financial product for a real estate company. Those customers, those same customers who are buying like a huge corpus house over there, could also be buying really small value items on their credit card, like 100 rupees trinket, for example, online, using their credit card. That is also a financial transaction. That is also a financial product. And then on the other end of the spectrum, you have investment bankers who are helping, in a sense, major companies to go around shopping for other companies that they want to acquire or that they want to merge with. So, yeah, you have both spectrums of it that happens. But at its core, at its crux, what really happens in financial services is intermediation. I strongly believe that every player in the financial industry acts as intermediaries. They channel money from people who have too much of it to people who have too little of it and need a little more of it. They also match people with a very low risk appetite who just want to conserve their wealth with people who have a very high risk appetite and are willing to take that plunge over there. So that it's essentially about matching the two sides of the equation when it comes to financial services. For example, let's say that I am looking to plan for my retirement. In that case, I would want to take really low risks with my money, right? All I would want it to do is to make sure that it just about beats inflation, so that the corpus that I'm building out after I retire, 30, 40 years down the line, I'm able to maintain the same lifestyle that I have today, or as on that day. And I have those monthly payouts coming to me. So in that case, I would want to take a relatively lower risk over there, which means the money that I send out, intermediaries are better off parking it with assets that just about beat inflation. Versus, let's say I'm trying to build out, a sum of money for me that will just be like my nest egg. And I'm happy if I can just pass it on to my generation. In which case, I'm looking to grow my money exponentially. So now, if my asset manager takes my money and gives it out in the form of a loan to a very risky startup who promises to 10x that money in the next 5-10 years, I will still be okay with that, because I know that this is not money that I need immediately after that 10 years or immediately after that 5 years, but I'm happy with the exponential returns that I get from it. So that's exactly what intermediation is all about. You earn the return that you are willing to take the risk for. And the best way for you to do that is through financial institutions. Now, some of you may say that why can I not do this myself? Of course, most of us over here at least are financially savvy at least to kind of do that by ourselves. But let's admit it, a lot of financial products are quite complex. It's not something that anyone with money can wrap their head around, which is why the best way for going forward for most people are to use these intermediaries who will end up finding these avenues for you to invest into. Also, the market kind of plays with a lot of information arbitrage, and we'll come to that when we're discussing AI, because it is a very important point over there. All right. So, what are the other kinds of arbitration that we can see right on the screen? Yes, right. Insurance. Insurance is a very good example of arbitration. So, let's say that I take the retirement example for just for example. Retirement is a scenario that is sure to happen, right? The probabilities of me retiring, the probabilities of when you start working you retiring are quite high. Most people retire, but the probability of me ending up in an accident, that is very 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 low. These are what we call six sigma events. But in god forbid something happens and you end up in an accident, you would want to make sure that thereafter you're able to cover your expenses for your accident, as well as take care of yourself after the accident as well. How do you do that? You go to an insurance company and you pay them a premium for covering you in the case of such an event that happens. The insurance premium company, so what they do is they take your money, they invest it back into the market, and they have like a probability factor that is based on a bunch of other things. We'll probably get into that if time permits. And then they figure out that okay, this is the probability that this person is going to redeem, which means if this happens, x percent, the amount and the x percent, which is the redemption possibility, I'll have to make sure that I'm earning over and above that from the market, so that when I have to pay them back, I still have that profit margin that's there. So they do tend to match that intermediation over there. So how do most of these financial institutions work? um So this is broadly like how I would like to say, banks and NBFCs work. There are like three legs. I like bucketing most things into threes or fours. So my three legs for banking are how they service customers. That servicing could be the front end team. That's, when you go into a bank and tell them I want to apply for a loan, or I want to check how much of balance do I have on my account. All of those are your front end facing customers. Then we also have the how are banks storing the money that they got from the customer. So you have treasury management that's happening over there. You have a lot of these statutory norms that you have to deal with, the liquidity ratios that you have to deal with as a money. How am I taking care of that while making sure that I have a positive net interest margin? Net interest margin is basically the difference between the amount, the interest that banks pay to depositors, and the interest that they earn when they lend money to borrowers. So all of this is what banks do when they think about how are they storing the money. And then the last leg, which is how do we grow our money or how do we grow our customers. So this can be through marketing, it can be through on ground sales, relationship managers, cross selling, and the entire works over there. That is broadly what banks do, and you can fit in a lot of the teams within these three buckets itself. Now you're asking me, where does technology sit over here? I would say right now, technology plays a very big role on how we service our customers. It's right from 2013, 2014, with the introduction of core banking system and internet banking, IMPS. A lot of how we service our customer problems are moving on to the digital forum over there. You'll see a lot of banks hiring for digital people. Just for example, Indian Bank. Now, I know when you think of Indian Bank, you think of a very old public sector undertaking. So you would not expect them to be really advanced. But recently, one of the roles that I saw Indian Bank was hiring for fresh graduates was digitally savvy relationship managers. And the job description was pretty interesting. So they wanted people who could take their customers through, educate them about the different digital channels that are there. How do you use them? What are the benefits of it? Like for example, they had a credit card that was there for college students. So the credit card is basically tagged to their ID cards. By the way, you guys should also probably try it. So not only does the ID card act as an access pass for them, but if they want to pay for their lunch at their canteen, or they want to buy some stationeries from the local store or stuff like that, they can do that by simply tapping over there. And they have a few tie-ups. Indian Bank has a few tie-ups with a few outlets around the college, and every time you tap to pay, you also earn reward points. And those reward points can again be redeemed against things that are essential to your college life, like books and periodicals and getting that library membership and all of those sort of very interesting stuff. So these are products that a lot of digital products that a lot of banks are coming up with. And yes, I think that when we come to how we can use AI, it's like very very exciting. But yes, moving on. Investment banking, I think the most common way of people to look at an investment bank is the front end, back end, and the middle end of investment banks. But really, if you had to ask me what is it that they do, the front end is essentially industry focused groups or customer focused groups. So what these guys are doing is they act as the revenue makers. They're sourcing deals for investment banks. They're talking to customers who are in need for a syndicated loan and arranging for that to happen. And if there is an expansionary plan, they're underwriting it. They're projecting what will be the future income from these capital expenditures that you're making on today's date, and etc etc. The middle office is where most of the due diligence and the compliance and the risk management and a lot of the number crunching really, really sits in. So yeah, while the front office is building the pitch decks and all of that, it's really the middle office that's figuring out, basis whatever inputs they're getting from the clients and the front office team, as to what are the assumptions and what are the key factors that they should be taking into their projections and into their number crunching over there. And then we have the back office part. Now the back office, I know a lot of people just assume that what would they be doing, but because you're dealing with so much of data in the middle office and and with the front office and all of that, the back office plays a very crucial role in making sure that the sanity of that data is there. If say I am getting market data, is that market data in real time, as close to real time as possible, or is there a lag over there, and is that lag going to end up impacting the kind of trades that are executed by the middle office folks over there? So the tech layer and the data layer at the back office forms a very very crucial part over there. Now these guys also have to have a good understanding of finances, because let's face it, if I'm just a data person and I don't really understand what all data is there, I'm not going to treat them all with the same kind of respect, right? So I need to know what is the pecking order of the different kinds of data that is there. For example, if say my middle office and my front office team needs to build projections for a company that's not a listed company, so what all data points do I have? I can get GST data, I can get comparable market data to understand the sentiments that are there. But do I really need GST data in real time? No, right? So the back office team, the data team, has to make sure that all of these are there in place for them when they're cleaning up the data and providing it to the middle office. Then also the compliance aspect of it, because you're literally handling other people's money, you have to be very careful with it. So the compliance aspect of it, making sure that there are adequate number of security measures put in place, that is also something that the back office has to take into account. So a lot of the times, whenever we see audits happening in these regulated financial entities, it's the back office team that's taking care of this. So that's like a huge huge hassle. So yes, audit is also like one huge layer that I think is very underappreciated, but yes, a vital part of what goes on in most of these financial institutions. All right, we've kind of covered that. Next is, okay, before we move on to that, investment banking, private equity, and venture capital kind of operate all in the same way. But does anyone have any guesses as to what's the difference between them? Like, Is there any, like, all of them are dealing with money of companies or monies of high net worth individuals? What's the difference there? Why do we have a different private equity company? Why do we have different venture capital? What are they doing differently? Any guesses? All right, let me tell you what they do differently. So, while investment banks most of the times end up dealing with data that is market facing and publicly available, whereas when it comes to private equity, it's there in the name itself, right? Those are mostly private companies. So you do not really have access to public companies' information. What you have access to is private companies' information. Um, that's a story. That's a whole story by itself, because there are, while the accounting norms should ideally be the same for both private and public companies, uh, availability and authenticity is quite an issue. Just for example, we've all heard about what's going on with Byju's, right? It's a very, very big private company. But yes, because there was no clarity, their auditors are now resigning, saying that, you know what, we really don't know what's going on with the company. We don't know what's going on with their financial books over there. So that's kind of the difference between investment banks and private equity over there. All right, moving on. Asset management companies. Again, they, while private equity and investment banks deal with high net individuals' monies, high net worth individuals, or with companies' monies, uh, asset management companies tend to deal with the money of you and me, retail investors. Simply because, remember, we were talking about it a while back. It's not always possible that us retail investors know everything about investment. I could have studied for hours and hours, but there is still going to be some market arbitrage that plays out, because I am not that hands on into the market on a day to day or an hour to hour basis, which, by the way, traders and asset managers very much are. So, what are the kind of roles that are there on the asset management side of things? Of course, you have, so you do have the operations layer or the front customer facing layer, where, if you want to redeem, or if you want to top up your portfolio, and stuff like that, you can go walk into an office. Nowadays most of us do it digitally, but yes, you can walk into a physical office and requisition them for the same as well. But the other things that front office people do is to attract new customers. They have a team of research analysts who come up with amazing, amazing reports that are out there. Now, these reports give a sense of where the market is moving, which companies are doing well, why they're not doing well, why are they going overweight a particular sector basis the macros and all of that. So it's very rich in insights over there, and it takes hours for them, sometimes even days and days of research goes into putting into that. That acts as a very good funnel for these asset management companies to attract new customers. Now, if I see, as a research analyst's report coming out from AMC XYZ, whatever, and they've been bang on the money for the last, you know 2-3 quarters, let's say, I'm going to have faith in that company to do their due diligences well enough to want to invest money into them. So that's when I start investing, is where my portfolio manager, my sectoral manager, all of them come into play. So yeah, that's your front office folks. And so I don't know if you guys are aware, but one of the things that when I started investing, one of the things that I was told to look into, especially when selecting an AMC, is to see who the portfolio manager is, see what all were the portfolios that he or she has managed in the past, and what was the, their CAGR, or the cumulative growth rate that they had over there. And that will give you a good sense of whether your money is safe in their hands or not. So portfolio managers, again, I would consider them as being more front office than middle office in this case. Then the back office guys are, again, the same set of guys, they're dealing with the data, they're dealing with the technology, but they're also helping to execute trades. Now, trades, especially for AMCs, need to be marked to market at the end of the day. So you cannot afford to have any squaring off of losses over there. These guys have to be extremely sharp. They have to be very, they have to be able to feed in and factor in all the, numerous data sources that are coming in when executing these trades. A very competitive job, a very fast paced job, a very rewarding job as well. All right, moving on. Now that we've covered the basics, let's get into how technology can be used or is being used in these different institutions. By the way, have any of you already interacted with any AI in with your banks or with your asset management companies or stuff like that? If you have, do let me know in the comments. I would love to hear, what your experience has been. Because yes, many of you would be surprised at how prevalent it's already there. No, none of you have used your bank's AI. Okay, so a lot of banks, by the way, yeah, this is broadly where AI is being used in banks, but from, I would say, from 2019, HDFC Bank had, for their app, released something called Ava. And Ava was actually a chatbot who was at the back end she was AI empowered, so she could take in whatever you were saying, figure out what is it that you really need, and offer those solutions to you. So you didn't really have to call the customer care team anymore. You could just interact with Ava. So that was probably one of the first few implementations of AI in banking that I saw. Pretty exciting. It was still it I would say it's with generative AI right now coming in, there is a lot more that can happen. But even then, back then also, I felt like it was quite revolutionary over there because, a, let's say that I have seen a credit card transaction which I did not make, and I want someone to immediately respond. Normally, what would have happened? I would have had to call up the credit card customer care. I would have been put on a long line on hold for a while before someone comes to address the problem to me. Chances are that I'll be redirected to someone else. And, it'll be like a long while before I get any semblance of a reasonable response coming in. But with Ava, I could just tell her that, Ava, I have this transaction dated XYZ against this particular merchant for this amount. I did not authorize this transaction. Can you trace it back for me? And that's it. Eva's working in the background to get all the relevant data for me. And yes, I think a couple of hours later, I did see an email telling me that this transaction happened here. This was the pin you entered. The merchant's name, the merchant identifier is this, but you may recognize it with its merchant's common name, which was XYZ. And I was like, okay, this restaurant. Yes, I did pay for that. My bad. Sorry. Thank you, Eva. So yes, I think customer experience, customer delight is one big area where AI is being used. A lot of tasks are being automated when it comes to AI. Another place is, so there was this beautiful McKinsey report that spoke about how AI is being used, and this was back in 2020. So I would say it was really dated, but still a beautiful report that really spoke about how it broke the entire banking experience and how AI is working in banks into four buckets. One was called the intelligence layer, which when I read through the report, I figured what intelligence meant was their analytics layer that was there. The next was the personalized layer, which was basically using those analytics, the data that you've built out and your data models that are there, to provide insights and recommendations for each and every customer that you have there. So the intelligence, the personalized, the omni-channel layer. The omni-channel layer basically meant that you don't always have to use your banking app or go to the net banking or the physical branch. Even if you are just tapping to pay, I should be able to do that for you. So the omni-channel and beyond banking layer, which was giving you nudges to get healthier with your financial journey that was there. So just to give an example, and for this example, I would like to take the case that's not yet there in India, that of Apple Pay or the Apple credit card ecosystem that Apple has built over there. By the way, you all are aware, right, that Apple has its own. By the way, how many of you are Apple users over here? Let me start with that question. So Apple came up with an Apple credit card for their US users. Now, we all know that credit cards can only be issued by someone who's licensed to be a bank. But Apple is not a bank, right? So, how did Apple manage to come up with a credit card? Any ideas? Any guesses over there? Apple actually tied up with Goldman Sachs over there and issued an Apple credit card. It was completely, it just had complete the Apple branding all around it. And at the bottom, you just see like, powered by Apple. By the way, Jay Shinde says that he's a Samsung user. Samsung also has a pretty good payments ecosystem for their mobiles as well. But for this example, let's just take Apple. Let's say that I am an Apple user, and I have an Apple Watch. I'm not an Apple user, by the way, but still, let's say I have an Apple Watch and I live in the US. So I've also gotten an Apple credit card. Now, Apple, through my credit card purchases, can see that, okay, Kamalika is someone who has taken a cult membership. Great. So she is someone who takes her health seriously. Apple also has now. How do I provide or disburse my the financial services that Kamalika needs? She's already authorized, or she's set up facial recognition. So every time I recognize or Apple recognizes her face, I will make sure that the transaction goes through. So Kamalika does not have to do anything over there. All she has to do is make sure that she looks like herself. Not a very hard task, I'm assuming. Then at the back end, because I've bought a cult membership. Whether I check in or not is a different story. But they know that I'm someone who thinks about my health, who's conscious about making conscious efforts to get healthier. So why not tie up with health insurance companies and offer her like a 2% premium, because the risk of her having some health related diseases are quite less over there. So yeah, I get a discount on my premiums thanks to the fact that I have an Apple payment ecosystem. Now, let's say that Apple has also built the analytics at the back end to see when is it that Kamalika is opening her cult app, because that presumably means that she's either checking into a cult center or booking a cult session or working out at home on the cult app itself. So then that way I'll also be able to monitor if she is indeed making progress on her health or not, and feed that information back to my insurance provider as well. So they're able to de-risk me over there too. Next comes the other aspect of personalization. Let's say that I use my Apple Watch every time to make payments. I tap and pay every time over there. So they're able to figure out, using my geographical locations as well, where is it that Kamalika visits most, where is it that Kamalika likes to spend most of her time with, what kinds of goods or shops does she like to enter into, and does she shop there, does she not shop there. All of that can be tracked now, and each of those at each point in time. Let's say that I've walked into a Marks and Spencer, and I don't really have an intent to buy, but I get an alert telling me that, hey, there's a 5% off for you. I'm going to be enticed to buy. I'm a discount hunter, so I'm going to be enticed to buy. All of this at the back end really is triggered by AI. And AI, like, then coming to the beyond banking part, so we've covered intelligence, personalization, omnichannel. Now coming to the beyond banking part, let's say that they want to make sure that I am able to save my money. It's not just about giving me that 5% discount and making sure I spend all of my money, but also I'm saving for a rainy day. So you keep giving me the AI keeps giving me nudges and says that, oh, the market moved this way, did you know that it may be a good time for you to invest in the market. It's not really investing on my behalf, but it's giving me those nudges based on real time information that's flowing into the ecosystem. I think that is one of the things that, on the consumer banking side of things, it's very very interesting for me to kind of see what is happening or what the potential is. Aditya has a very interesting question over here on the chat window. So Aditya is asking, what do you think, will AI increase bank security and will it cause to more employment? I'm going to take up the security question first, Aditya Gaude. uh, why security? Because recently there was a paper that was released. This was from Kaspersky Security, the company that does all the antivirus security and all of that. So they said that they were able to find hackers who were using AI. They were just deploying an AI element into your iPhone and using just the listener of uh, they had a keyboard listener. Let me remember this properly first. Yeah, so they had a keyboard listener, and just using something as simple as their iPhone listener, they were able to figure out what your bank password could possibly be. Just AI figuring out that, okay, this was the time gap between the two clicks that happened. This was the tone that each click figured, gave out. So possibly this is the combination of this person's account keys, or account pin numbers. That is a hugely scary role, or an emergence of unethical use of AI in financial sector for me. And yes, is that happening? Yes. Are people working towards, kind of reducing the impact that this can have? So again, giving another example, Google and HSBC, just last month, beginning of July, they had announced that they had done a very successful pilot on fraud detection. So they had actually, so when it comes to fraud detection, you have to play two roles over there. One, you have to make sure that you are removing or reducing your false positives. So you're actually stopping the actual fraud attempts from happening, and you are not letting you're allowing for more genuine transactions to go through. Now, they noticed that the incremental benefit of using AI in their fraud detection mechanism helped to increase the actual fraud detection to about 20 by 28%. So while on one hand we are seeing AI, nefarious use of AI coming up, on the other hand we also have these kind of very interesting use cases where they're able to detect and successfully protect us from a lot of these frauds that are happening. So both sides of the spectrum. How are banks dealing with the security threat of it? You'll see, so previously a lot of encryption models that used to be there used to be on a secure hash algorithm, SHA. It's called SHA. It used to have the SHA 64-bit. Nowadays, if you see, most banks are moving towards an SHA 256-bit. A lot of them have also moved to SHA 5112-bit. So basically, as you keep increasing the number of bits that you use in your encryption key, the harder and more complex it becomes for the other side to kind of decrypt, or to kind of hack into your system. It's going to take, they've done some, I don't remember the exact numbers, but it had come out to be a few thousand years that it would take for someone to decrypt and kind of break into an SHA 512 algorithm over there. So yes, there are technologies, there are uses of AI where we're seeing nefarious intents coming out, a lot of frauds happening. But on the other side, banks are also playing an active role in making sure that they are increasing their security side of it. Coming to your second question, Aditya, on will it cause more employment? I think personally, I would not be scared as much of just AI replacing my job as much as I would be of a person using AI to do work smarter than me, replacing me tomorrow. Why do I say that? Because so I work as a product manager. I've also worked, I've led analytics teams before. So let's say that, I need to make sense of a lot of unstructured data. Let's say that I want to do like a sentiment analysis of the real time Twitter threads that are going on over there. Now, if I had to do that by myself, I'll have to write the code, I'll have to tweak the code every now and then. I'll have to make sure that, I'm putting the weights for each of my sentiments or the words in the array correctly and stuff like that. I could make a mistake. But if I have an AI that's also assisting me, I'm helping it build the logic, it's helping me to debias the system, it's helping me to expose the flaws in my logic and make sure we're plugging all of those roles, I will end up delivering a lot faster and a lot more accurately. Now, when it comes to any employer, what they do want is that the work is done faster and I have minimal number of, redos on my work. So my work's accuracy also has to be high. So Aditya, I hope I answered your question that will AI replace me? No, but a person who is using AI better will definitely replace me tomorrow. All right. I Where was I? I was talking about what has happened in the banking sector. Okay, let's come to credit risk management. This is a very interesting space because your credit cards that we have, essentially, what do? A lot of players in the market believe that credit card companies are criminally aligned to you defaulting on your credit card payments. But what if that need not have happened anymore? What if there was a way for them to kind of build the provisions, park those provisions in a place that ensures that, if the customers, the risky customers that we're bringing in, even if they're not able to repay us, even if with the higher interest rate, we are saved, and that information is taken in real time basis the kind of activities that they see happening on your credit card. That is again something that only AI could have done. So another small example that I wanted to, because we were talking about, so this I remember when I saw the back office optimization. A lot of the times when it comes to financial institutions, they have to kind of take a call on the basis of the information available to them. Just to narrate a story, all of you are familiar with Warren Buffett, right? He's probably the greatest investor of our time and the time before us. But yes, Warren Buffett and Charlie Munger run Berkshire Hathaway. Berkshire Hathaway currently owns about 25%, which is like the limit that, any third entity can own a financial institution in America. How did they get to that 25% is a very interesting story. So back in the 70s, sometime in the 70s, Warren Buffett, so there was this news, so that this was also back when uh, American Express used to offer insurance services as well. So American Express at that time had insured a company that said that they were going to store some, half a dozen, or I don't remember exactly how many, but they were going to store like X number of oil barrels with them. And so American Express had provided them that storage unit and underwrote them for a particular value and all of that. It turned out, however, that that person had just taken that money and offed with it. And all that those oil barrels actually had was seawater, worthless seawater. So that entire amount that, American Express had underwritten and given to that person was worthless. It was just seawater. They were going to get zero out of it. Now, a lot of financial investors saw this news and they decided to short the stock. They said that, American Express is going to go down. They're not going to have enough money to recover. They're not going to, and because they are, they have to hedge themselves again credit default of their credit card customers also, this company is going under. And everyone started shorting the stock, and American Express's stock started declining like crazy. Like within a few trading sessions, it had fallen to about 80% of its volume. That was when it picked up Warren Buffett's interest, because A, he was a user, and B, he wanted to understand really what was happening. So he went out to the markets, physical markets where people were accepting American Express, and asked them that, do you know of the oil seawater saga? And everyone was like, what is that? We have no idea. So that's when he figured that while investors are losing trust in American Express's core business, which was their credit card business, was still doing very, very well. The merchants had extreme trust in American Express. The people who were using the card users had very high trust in the system. So this was an arbitrage, an information arbitrage moment for Warren Buffett. Imagine if this had happened in today's day and age. In fact, something similar did happen back in 2020. If you all remember, there was this crazy stock called GameStop in the US. GameStop started, it had started declining because, people kept saying that no one's going to be renting games anymore. You have the Fortnite and Robloxes of the world. Why would I need, everyone's moving to the metaverse. Why do I need a GameStop? So a lot of financial institution investors started, kind of discounting the stock and massively discounting the stock. That was when a few savvy investors on a Reddit site called Wall Street Bets noticed that the number of people short shorting that particular stock was 1.4 times the people who held the stock. So there were more short sellers than there were stocks available. So if someone actually started calling for those shorts, all of the short sellers are going to be in the red. And they started this viral thread on Reddit to, kind of telling everyone, buy GameStop now, to push up the price because everyone else is going to be forced to sell it and the price is just going to go up more and more. And imagine if we had an AI system that could figure this out. This is happening in real time. This is what, as a fund manager, this is what I have done with my stock. And I can read the market sentiments that are coming in real time from this subreddit stream called Wall Street Bets. I know that okay, something is going to happen to GameStop, so I will start sell. I will start, either covering my losses, covering my short position, or I'll start buying more of the stock myself, right? But again, AI, because it is a self-learning model, will eventually figure out that not every person tweeting or every person on the subreddit stream who's talking about GameStop has the same impact on GameStop. It'll have to figure out the weights between the different people. So that's where the level of influence for the AI system comes into play over there. And with that, also the actions that the markets are taking. What's the sentiment? How is the market moving? What does the candlestick look like over there? All of this happening in real time, instantaneously within the microseconds, and the AI system is executing those trades for me. That is something that I don't think I can do as a trader all by myself at all. Or at least, even if I did it, not in time for me to cover my short position over there. So that is that is kind of, the future that I see of people in the financial services industry with AI. You're still figuring out which are the good companies in your sector to chase after, but you're leaving such activities to AI to help you to do. All right, there's another question from Milind. Because of AI, the work of organizations will be complete, but it will take more cost to build. Oh, this is such a beautiful point over there. So, why is it? I mean, there was this. So, if you people know of Andrew Ng is how he pronounces his name, Andrew Ng. He's a professor at MIT, an AI researcher, and he has actually written a blog that says AI will build all companies that exist today. Very scary blog, I know. But he said that, they already have that capability. We already have supercomputers that can do that. We also have, we have the technology present to do that. We have the storages to do that. Storage costs are getting lesser and lesser. But why is it that we're not doing it? Why is it that every company is not already doing it? One, because the kind of customization or the kind of large language models that are needed to train the AI for your specific use case alone is it's way more expensive than the kind of payoff that you will get. So typically, capital expenditures that you make need to have a payoff within at least the next 2 to 3 years. If there isn't, people are going to start questioning you. But according to Andrew, what he found is that the capex for very niche, let's say that I'm running a large language model for my restaurant business that I have, or let's for example, because I run a newsletter of my own, I want to run a large language model on my newsletter. I'm going to have to put in so much of money that the payoff for it, for me, my if, let's for right now my newsletter is free and I don't advertise on it, but let's assume that I do get advertisers onto my newsletter. It's going to take me at least 10 to 15 years of advertising revenue for me to recover the cost of my AI solution. Only then will it start making sense for me. And a lot of companies really don't have that kind of a bandwidth or a leeway for them to invest into that sort of a venture over there. So that's probably why you're not seeing AI doing everything already. It just exorbitantly or prohibitively expensive for them to get every companies to get into it. So what they are doing is we're seeing a lot of specialized AI companies that are doing resource pooling, is what I would call. So you have companies that are focusing predominantly just AI in credit cards. Just that. There is a company that's run by a very good friend of mine who does exactly just this, just AI for credit card issuers. And she's able to sell her solution to all the credit card players over there so that the development cost gets spread instead of being spread just for one company, for one financial institution for over 10 years. It's now spread across 10 companies, and she's going to be able to recover that cost for each of them within 1 year, within 2 years. So that is why I think, that's a good point that Milind brought up, and really thank you for that, Milind. But yes, I do have a few more slides, so let's get on with that. Okay, this is something that I'm personally very, very passionate about, and I see a lot of things that are happening in the blockchain and the crypto space where AI is also playing a role. But first, a little bit of primer, a little bit of basics over there. What really is blockchain? So, blockchain, it derives its name from the way that data is stored in it. Blockchain is nothing but really a public database where everyone can see what data is being put in, what data is going out, who's putting it in, who's validating it, and all of that. It's just a public database. But the way that the entire technology stores and transacts data, it's literally blocks that are linked together cryptographically. That's it. As the number of transactions grow, the blockchain size also grows. Block records, each block, it records and confirms a hash function, which is nothing but the time and the sequence of the transaction in which that block record was written into the database. And there are a set of networks that are spread across the internet that govern how, or that govern the various network participants. Basically, it says how can you write data into each blocks, how do you authorize that this is actually a authorized person to write data into these blocks. So that's exactly what blockchain is all about. So there are, again, four pillars to blockchain. The first key concept, or the first pillar that I call, is the shared ledger concept, which was what I was telling you, right? It's a database or a ledger which is has access to every network participant who's there over there. So basically, you don't need to have your own copy of someone else's ledger. It's just one ledger. All of you have equal access across the network, and you can traverse each of the blocks to get to whichever particular transaction you want on that shared ledger. Permissions, or rather permissionless, because you don't really need an authorized third party or a trusted third party to give you permission to write into it. If you are an authentic, so you'll have a key with which you can participate or access the network. And if you are an authentic person, then you don't need that permission to read or write into it, as long as you are able to solve that cryptographic equation that is there for you. That's it. You just have to verify that cryptographic equation, and you have the permission to commit to the blockchain. Then the next thing is consensus. Now, how do I make sure that I'm not a malicious player in the network who just wants to sabotage the blockchain? So for that, I need all parties in the network to also come to a common agreement that what I've committed to the network, or the problem that I have solved, actually makes sense or not. And that is through a consensus mechanism that is known as, so there are broadly a lot of consensus mechanism, like proof of work is one, proof of stake, multi-sign, Byzantine, fault tolerance, lots of other things. Let's not get into those. So, but yeah, so there's a consensus mechanism to write into the blockchain. And then the last one is, by the way, again, where I see a lot of AI play coming in, smart contracts. So basically, these are rules, or digital rules rather, a set of agreements, a set of codified algorithm that governs how transactions can happen, how transactions get stored, how they're executed as a part of the blockchain. Now, why do I actually, let's get to that a little later. Let's talk about some of the uses of blockchain. By the way, till this point, are there any more questions? Do feel free to drop it into the chat window. Happy to take it up. So yes, where all can blockchain be used? Blockchain is currently used in payments transfer right now. You can see a lot of cross-border payments happening on the blockchain. And typically it's done because we have, in India, we have UPI, which is instantaneous real-time money settlement, available throughout the clock. Western worlds do not have that. It's coming in now. But for the longest time, they did not have that. So yes, blockchain had that added advantage that you could process it within a matter of seconds, in real time, round the clock. You can also use blockchain for monitoring supply chain. So businesses could pinpoint the exact place where any inefficiency in their supply chain has occurred, and isolate those instances and fix it. You have blockchain for digital ID. Have you guys, by the way, heard of this new project by Sam Altman? Sam Altman is the founder of OpenAI, which has created ChatGPT. You guys have used ChatGPT, right? Yes. If you guys have used ChatGPT, then you should know Sam Altman. And Sam Altman has another project which is known as WorldCoin. And WorldCoin aims to do exactly this. It provides a digital ID to everyone, and in exchange for your digital identity, you get access to a universal basic income program. So that's what WorldCoin does. Actually, even Microsoft, before ChatGPT, sorry, OpenAI came up with WorldCoin, even Microsoft was experimenting with digital identities using blockchain. Then there is blockchain for securely transferring and sharing data. So unless you know you want to share data with your network participants, and all of them have a network key, so you know that whatever's cryptographically encrypted onto the blockchain can only be read by them. So that's again another great use case of blockchain. Copyrights and royalties. This is where I think a lot of you would have heard of NFTs, right? NFTs come like this is like one of the biggest use cases for NFTs, which is that you can protect your royalties. If I'm the original artist for a particular piece of art, then every time that the art changes hand, I get a piece, I get a percentage of it, thanks to the blockchain, because it can track the art piece back to me, back to the original creator of it. Internet of things and blockchain is something that's a very new area that's coming up. It's quite interesting, especially as we move towards a driverless or an automated future for everything that's there. And blockchain in healthcare, again, something that WorldCoin was also trying to work towards. So, yep, these are some of the use cases that are there for blockchain. Moving on, cryptocurrency. It is what I would call an application of blockchain. Cryptocurrency is not blockchain, and blockchain is not cryptocurrency. Cryptocurrency is but one application of blockchain. And two of the most famous or popular cryptocurrencies are Bitcoin and Ethereum. Why I wanted to mention the two of them is that while they both seem very similar on the surface, the consensus mechanism for both is completely different. And so the underlying crux or the ethos for using Bitcoin or Ethereum also differs. Bitcoin, because it is a proof of work mechanism, every node or every participant of the network has to verify what a particular miner has input into the block over there. Whereas Ethereum is a proof of stake. So if I have 10,000 Ethereums, you have only 1,000. When I validate a transaction, it holds 10 times the value that you hold. So that means Bitcoin is fairly decentralized. It does not matter if I've managed to mine 50%. Actually, you can't mine 50% of Bitcoin, but technicals for another day. But yes, if I have mined, 50% of the Bitcoin, it does not matter because I'm one node participant. But in Ethereum, if I have 50%, 51% of Ethereum staked over there, then I can override any decision that anyone else takes. So Bitcoin is decentralized, whereas Ethereum is fairly centralized over there. All right. So where is AI being used in blockchain and crypto? Remember, we spoke about smart contracts. Smart contracts, creation of smart contracts is something that is very, very, very technical. It's not easily explainable at all. But now with explainable AI, or what most of us know as generative AI, AI that can talk to us and tell us in layman's term what a complex piece of object is really doing, creating your smart contracts is going to become that much more easier. So creating, executing, delivering, updating your smart contracts with generative AI or explainable AI is like a game changer. I think most of organizations, or most of, especially for freelancers, I think this is going to be a huge, huge thing, because I could set up rules for the payouts to happen basis the delivery of my each and every project, each and every milestone that I have. You can have AI kind of codify basic quality checks, which if it passes, then the company has no other option but to release the payment to the freelancer over there. So smart contracts, you don't have to really be an engineer and work on blockchain to get to smart contracts with AI. So again, answering the previous question that was there by Aditya, will we be replaced by AI? No, but AI is going to make it a lot more easier for us to access some of these high level things that common man like you and me could not have. kind of made sense out of. NFTs in AI, again, this is something that I'm very in two minds about, because in one way, yes, I know that if I have created a piece of digital art, it can get auto committed just like that into the blockchain as I finish it, and I can get the due credits for it. Now nowadays what's happening is a lot of gamers, especially, who have created skins for a lot of their characters, because it's publicly available. Everyone knows that gamer X created the skin, but someone else would have just created the NFT before them because they were technically savvy, and or they had more money to pay in the gas fees, and so they could just claim that that NFT was theirs. And every time someone used that skin in a particular game, instead of the original artist getting it, it's going to go to that person who just was faster than this person in committing to the NFT blockchain that is there. Again, explainable AI and generative AI is going to make that much more easier. AI and trading, I think we've already covered this. But yes, you will not have to suffer from information arbitrage. You will not have to figure out that, oops, I did not know that, the market participants did not care about the oil and saltwater wala fiasco about Amex at all. So you're going to be able to execute trades faster. You're going to be able to take into account all of that different information sources that's coming in, and execute better, well thought out trade strategies over there. You can just all you have to do is train your AI algorithm to your particular trading strategy, and that's it, you're set. uh with that, I'm to the end of my session. I would want to leave you guys with some, or rather, these are all the online resources that I regularly read to stay abreast of what's happening in the fintech space, what's happening with new age technology coming into financial services. So I would want all of you also to make use of these resources. These are amazing. Some of them are news sites, some of them are newsletters or weekly blogs, but really, really great in-depth research articles for all of you to stay abreast of what's happening in the space. That's all from my end. If there are any more questions, or back over to the hosts, the amazing Patkar College hosts that we have today.
Uh, that was very wonderful, ma'am. Participants can put their questions in the chat box.
There were a few questions. I hope I was able to take them as we were going on with the session. All right, Sonam has another question. What measures are being taken to ensure transparency in AI driven decision? This is such an amazing question, Sonam. And honestly, right now, at least in India, I would say our regulators are abreast with all of this, with the latest technology. But world over, people are, I would say, 5 steps behind technology, unfortunately. So what is really happening is most people don't understand, they don't understand the AI model itself. So you can't really explain what the model is doing. It's like a black box. There's no way for people to explain why has the model taken this kind of a decision or not. B, a lot of the people who end up taking these decisions also, if they're blindly just following what the AI is saying, then there could be a possibility, because AI is still a self learning machine, there is still a possibility that you end up giving the machine wrong kinds of incentives and the machine goes rogue. Or worst case, like you probably hear this a lot, the AI starts hallucinating over there. So, yeah, to prevent a lot of this, um RBI, at least in India, RBI has already started trying to do a lot of these pattern recognitions using AI. So literally, you're building an AI that explains other AIs over here. I think that's like Very, very, it's kind of a loop over there, but yes, it's kind of a very interesting thing out there. Also, nowadays what they're saying is the weights, so most often if you see, companies say that the AI algorithm that runs in the background is proprietary, but you'll at least have to expose what are the attributes or the inputs that was fed into this AI. You don't have to tell them the weights and all of that, but you have to at least tell them what are the inputs that are there and what was the final signal that you got out of it. So that is one way that people are taking care of transparency over there in India, at least. RBI is working towards that. All right. Arundhati Menon had a question. Will bank jobs, government jobs be vastly affected? And in what ways could that happen? We were just talking about RBI, right? So RBI has literally set up like an entire innovation hub to take care of all of this. So there are, I would say, there are going to be a vast number of new jobs that are coming in simply because we've not envisioned, the entire gamut of what all is it that AI can do for us. And for all of that, we're going to need specialized people who understand finances also, and who understand what is it that AI is trying to do over here. What is the incentives that the AI has over here? What are the inputs that are going into the AI over here? So yeah, how Power BI is important as an AI tool for fintech sector. So Swati, Power BI is something from Microsoft, which is known as a business intelligence tool. So what it helps you to do is, let's say you have vast array or a plethora of data with you, and you want to make sense out of it. How will you do it? You will have to visualize it in a way that's intuitive for others to understand. You will have to make sure that the insights you're generating can be, even for a layman, or for your audience. Your audience in a fintech is not generally a layman, but yes, for your audience, they're able to intuitively grasp the insight that's coming. So Power BI is what does that. Now, can you have an AI at the back end that is processing this data and making sure that it's easier for Power BI to represent it? Definitely, yes, that is also something that's happening. Does our reliability on AI backfire on us, creating more insecurities? It can, of course. We were just talking about how people are using AI and something as inexpensive as an iPhone to listen into your keyboard clacks and figure out your password. So yes, it can. That's why you need to have ethical uses of AI and regulations around it. Oh, this is a nice question, Gunjan. What are neural networks and how do you relate to AI? So okay, there's AI, there's machine learning, there's deep learning, and there are neural networks. So basically, everything is like a subset of AI. There's AI, which is the parent umbrella. Then you have the machine learning layer, you have the deep learning layer, and then you have the neural networks. So, what neural networks try to do is to simulate the synapses or the electrical signals that keep happening every time we humans have a thought in our brains. So, they're not obviously doing it for every thought that we have. That will also probably be very dark, but jokes aside, they are trying to, for a lot of the logical questions that we have, they're trying to simulate how our brains work. That is what neural networks do. Now, what is it that, what's the difference between machine learning and deep learning? So machine learning essentially builds out data models, builds out uh, a self-learning sort of a model with incentives and a feedback loop to figure out that if this is the input, what is the kind of output that should be there. Now, deep work or deep learning is this at a 100x scale. So you don't have just 5-10 inputs, you have lakhs and lakhs of inputs coming in. So that is what deep learning does. And how does it do? Through neural networks. Okay, what's a banking dashboard? Is it created out of AI? Swati, typically banking dashboards, what I know of at least, use Power BI, use Tableau. Are they using AI? They're using AI for a lot of their risk compliance and all of those sort of things. Are they used in creation of dashboard? Not really, because it's a fairly automated process already, right?
All right. I think we have all enough of questions. It was great, ma'am. Let me take the honor. Good afternoon, everyone. Today's day was really a day of learning. On behalf of Patkar-Varde College, I, Siddesh Kolge, take this opportunity to propose vote of thanks to those who have directly and indirectly contributed to this webinar today. Firstly, I would like to thank all our resource person, Ms. Puddar, for enlightening us with their knowledge. Today's webinar was full of knowledge and interesting things. It gave a deep insights into the topic and revealed some interesting facts about AI in Indian financial sector. Ms. Poddar provided us with an in-depth exploration of AI in reshaping Indian financial sector from optimizing operations to enhancing customer experiences. I am pretty much sure that your precious knowledge what has imparted to us will definitely help us. Our heartfelt thanks to all our participants, our teachers, and our technical staff for making this webinar a huge success. I once again extend a big thank you to our principal ma'am, Dr. Pratibha Gaikwad, CEO ma'am, Dr. Mala Karkar, and our chief coordinator, Ms. Swati Chakkar ma'am, and the management for their constant support and the guidance and encouragement. A successful event has many hands working effortlessly for the months. I thank all the members who have directly and indirectly involved in making this event a grand success. Thank you, everybody. Last but not the least, I request the participants to submit their feedback in the link provided in the webinar so that we are able to generate the participation certificate in their respective emails. With this warm words and kind message, we move on to the end of the day webinar. Thank you so much, ma'am, for joining us.
You. Thank you so much for hosting me. It was my pleasure.
Participants are requested to just fill the feedback link so your certificate can be generated. Thank you so much.